Hello and welcome to Options Guide TV. My name is Brian Overby. I'm the author of The Options Playbook, and I'll be your host for about the next 25 minutes here on Options Guide TV. All right, so last week, we finished up the week looking at Apple, and we did our Fundamental Friday, where we're actually working through an entire position on Apple, and we're using the paper trading account to execute that position. So every Friday, we take a step back and look at the fundamentals, go back to the basics of option trading. And then every Monday, we come back and we look at, some more advanced trades, more exciting trades overall. And today, we're going to look at Uber, mainly because we put a trade together last week. We actually had a really good call on Uber last week. And then we're going to look at Next Power. NXT is the symbol. And this is one stock that has benefited from the conflict that's going on over in the Middle East. But it's really had a lot of chop recently, a little bit of a run up. Today, up a tad. And I think we're going to fade that run up into their earnings report, which is going to be Wednesday before the open. So those are the two trades that we're gonna look at today. I want to confirm it's going to be Tuesday after the close is when NXT is going to be announcing. And so let's get right into it. Here we go. So we're running over to the Trader Pro software. And in the software, we're going to, let's start by looking at the chart in Uber. And here's what we saw. Uber announced earnings. Uber announced earnings. And after their earnings report, the stock made a big jump up. But there was a lot of overhead resistance, and the known event had already happened. So we came in and looked at a little bit longer term, not long term as far as, the general way that we like to set up short call spreads. Long term to me, or I would say the standard would be about 45 days out. But we were taking advantage of the fact that volatility still hadn't really waned in the front month expiration. And we were able to sell a short spread for a very decent credit with only a few days remaining. And what we were targeting is this 80 level. There's many opportunities here where we came down and we touched the 80 level and bounced, almost touched there, hit it here, went through it, creating this gap in the chart. Came all the way back down, back up to the 80 level, and we touched it almost 1, 2, 3, 4 times. Now, we briefly went above that level, but now we're back to the norms. We're trading at 77. So that position, you didn't even really need to manage it. If you put it on Wednesday, when we talked about doing the trade, you had all day, you had half a day Wednesday, all day Thursday, all day Friday. And it easily would have expired by Friday if you put that position on. So I thought I would draw that out because we looked at Uber. Uber was up 8 points on the day, had a good earnings announcement. Always happy to see Uber do pretty well. And then we just wanted to fade that. And if we do come back, there's only so many times that a stock can bump up against a resistance level on the upside, and usually it will eventually give up, and the stock will, make its move to the next level higher, which the next level higher is, you target the 200-day moving average around 84, and then you go all the way up to about 88, where we see this big gap down. So there's a lot of noise between 84 and 88. As far as the previous Uber chart. So I like the stock if we get to 80, and I'm going to have an alert set at 80. And I don't mind if we can close anywhere around 81 or so. That's where this little tail is, where it spent a few seconds. But if we can close at 81 or higher, I really like the looks of this chart and the potential for it to move. So I don't want to buy it now. I still think that there's going to be a lot of fluff, but we get back to this level, I think it's going to be hard for that resistance to the upside to actually actually hold. All right. I like that with Uber. Now let's go to, and if you have any questions about the Uber trade, or if you put the Uber trade on, or any questions about Fundamental Friday, please do put them in the chat box. I'm willing to address. We want to make this an interactive show as possible, so don't be shy. NXT. So NXT is a power company, and we'll just show you the volatility of NXT heading into this earnings report, but very strong move ever since the conflict began in the Middle East, and very strong move up, big pullback. Now we a period of consolidation obviously filled this gap, came all the way down to this level, but it's really struggling here too. So you have one of two things. If I look at this, you can say to yourself exactly what we talked about, that only this resistance level to the upside can hold. It's doing a lot of work. And came up, touched the 130 level, one there, one there, one there. And now if we come back again and we break through to the 132 level, then you're all right with getting bullish on the trade all the way through. But we're at 130.40. Do we think the earnings report is going to support this high valuation for NXT? And, where are we going to next? What happens if there were, I don't know, good news and that there was some resolution in the geopolitical concerns? If that happens, does the stock go down? You're going into earnings. You're going to need inflated earnings to move beyond. And if we did move beyond, I wouldn't mind getting long. So at this point in time, let's sell a short spread. And that's what I'm going to look to do. Now, we can look at the open wing butterfly with the short-term expiration. You're announcing Tuesday of all day Wednesday, all day Thursday, all day Friday. But, we're trading at 170 vol. That's a lot of implied volatility on that trade. So we can go fairly wide. And we can get a real decent risk reward by just selling something at the money and then buying something a little bit out of the money. So on the call side, well, we do got wide bid-ask spreads. I didn't realize they were as wide as this, but I've been able to get good fills in this as a trading vehicle. But you see the open interest over here. You also see just the volume in the stock really kind of says that we could trade somewhere near the midpoint on this. So here's what we're going to look to do. We're going to sell the 400 strike call with the May 15th expiration, which would include this week's earnings. And we're going to sell this one. And then we're going to go out and we're going to keep the risk contained. I don't mind going out more than 5 points on this trade. 145 is where we're looking at. If we look at the 150, let's buy this. Let's look at that one to start. Let's see how wide we get. 267. Yeah, I was only going to look at doing the 5-point wide one, but that's a little tight on this. So we're going to hit this, buy that. 135 on the midpoint, and that's a solid risk reward on a 5-point wide trade. I like this trade. Let's move it up one. I just don't want to put out that much risk on that near term. So we're going to sell this. Let's sell the 140 and buy the 150. And we can still get 132 for that. So that's going to be the paper trade for the week. We're going to sell some short-term implied volatility in NXT. We're going to sell the 145, buy the 150. We're going to get this done for, I like that 140. Let's get the 140. I'm going to send this down to the trading floor at 140. This Friday's expiration, May 15th, and boom goes the dynamite. Order has been sent. So here is our order on Next Power Incorporated. We're going to sell the high valuation going into earnings. They're really going to have to have strong numbers because they've already been rewarded for the fact that they're going to have large profits based off of the price of oil and gas and everything, and highly anticipated that they will. If they miss a little bit, I do think we get some downside. If we do get the breakthrough, though, I don't mind looking at something bullish on the upside. So to start with, though, we're going to sell the 145, buy the 150, get this done for $1.40 net credit to the account. Our risk then would be 5 points wide minus that 140. So in this instance, it would be $3.60 on the trade. And let's send it to the what if calculator. Let's see if we can get it there right around 140. And so our risk is if earnings happens and after earnings we see the stock run all the way up to 150, the maximum we could lose on the trade would be, well, 357.50. So it's basing it off a $1.43 execution. I don't think we can get it there. Let's try to get it at 140, and you got to work the order. You might have to give up another nickel too, but I don't want to get any less than 135, but we'll take 140 on the trade. It's just the general rule of we want to be about a third of the width of the spread, and I don't want to get all the way down. I don't want to only receive $1.30 on this trade with the risk of earnings report ahead of me. Also, because of this volatility, where you would look on the upside, and we might do something after the earnings report if the volatility stays true. The historical vol is right up around 100, but you see the implied volatility drop off quite a bit as we go out a little further in expiration. So if we get that earnings report and that volatility stays sticky and we do get to move to the upside, let's look at one of our butterflies on the upside in this position. So we would look at being somewhere, we'd probably, well, I'll avoid these two because we got those positions on. And we would look, let's buy this one. Nah, we're too far out of the money. Let's go to a next expiration. 38 days. I don't want to go 38 days out. Man, that would be cheap. Let's look at it. I'm curious here. And these markets are much better than the near term. That gives me confidence that we could execute somewhere near that 140 level on that 5-point wide trade. 145, 160. 165. Yeah, 240 for 15 points wide. That's not bad. But 38 days out. I don't like that it's... That is a very, you're looking at the 145 strike call is trading for, we'll call it $9 at the midpoint. We'll call it $9. We can get this trade on and we still have a lot of delta from 145 to 160 because we're 15 points wide. And that's $2.40. That's a very good price considering you'd have to pay $8 to get something where you have, if we hit 160, we'd probably be out anyways. The biggest issue here is that we got 38 days. And if we hit the 160 level, vols have been sticky. It's going to be very hard to get out and get anywhere close to 15 on it. So if you did, you put it on for 240, it'd hit 160. If it did get to that level, you'd be looking at maybe doubling in the short term until we got closer to that expiration date. Let's look at something different here then. Because we don't have a different expiration to choose from, I don't mind this trade. We're short on strikes. Let's go buy this. Buy, sell, and buy. Let's see what this looks like. Yeah, not too shabby. You get 5 points of upside. So this is a skip strike butterfly, and I'm going to run over and pull up the options playbook and look at the skip strike with you. So let's pop out here just for a second. And pull this in. And let's put in skip strike butterfly. I kind of like this one. And I think we're going to put this one on. We're going to do the skip strike butterfly with calls. Okay. So stock is somewhere down here. We're quite a bit down. We're going into earnings. We've got 38 days to that expiration date. And that 38 days kind of protects us. So this is more like a standard short call spread. And we're going to do this as an alternative to that short call spread. So we're going to look at selling strike A, buying strike A, selling 2 of strike B's, and we're literally going to skip the standard strike, which would be strike C if these were all equidistance and you're doing a standard butterfly. And then we're going to buy strike D. And what it effectively does by skipping that strike is you're actually selling this call spread, because you can think of, I'm buying that strike and I'm selling that strike, or i.e. we're going to skip it. So if I bought it, I would complete the butterfly. But then if I sold it and I bought strike D, well, then I would be including a short spread. So I just say we skip it. And that's why I like to call this a skip strike butterfly as opposed to a modified or whatever anybody else likes to call it. We're literally embedding a call spread. And I think of this trade as an alternative to a short call spread, as opposed to an alternative to a butterfly. All right, let's pull back. So if you type in skip over into the search box, you will be able to find skip strike butterflies with calls really easy on my website, optionsplaybook.com. So now let's go back to here, and you see that same graph, and we'll pull this down. You're getting a lot of volatility. You got a big move. You got to go all the way up to 170 before this thing starts to get scary. We got this high implied volatility, so we got this weird skew if you do it as of today. But we expect implied volatilities to come down. If we look back at the chain right here, the historical vol is about 98. But going out even further in time, vol is even lower, 80, 87, 70. So there's definitely a skewing to lower volatility going forward. Any news in the Middle East, any resolution, anything that could drive the stock lower, but it could definitely affect volatility if we get any good news. Now, obviously, the reverse would hurt the position, but all the news has been baked in so far. The conflict's been going on for way longer than anticipated. And because of that, I want to do this skip strike butterfly in Next Power Incorporated heading into their earnings report. This has given us some protection. And here, let me send this to the trading floor. So let me go through it one more time. We're going to go out to the June 18th expiration, 38 days out. Stock right now is trading at $130.48. We're going to buy 1 of the 165 strike calls, sell 2 of the 170 strike calls. We're going to skip the 175 and then buy the 180. That effectively brings in a credit to the account to help pay for our standard butterfly. It adds a little bit of risk, but it does that. So we can get this done for a net credit at the midpoint of $1.30. And I'm going to send this trade down to the trading floor. So hit send, boom goes the dynamite, order has been sent. And that we'll follow this trade. And I'll make sure that it gets filled. Now, 130 is going to be kind of hard in a paper trading platform, but I do think that you can execute. Volumes are there, earnings are coming. You can execute close to that. I mean, maybe I'd take 120. I'm not going to go all the way down to $1 with the stock at 130 right now, but we're looking at 40 points before we hit that 170 level, and our risk doesn't kick in until we hit 175. And that's basically the risk of the short spread. Now, if you do this trade, there will be a requirement in your account. And it depends on the rules of your brokerage firm. But if you're looking at total risk, your only risk is from 175 to 180. Sometimes brokers will be finicky though, and they'll say that this isn't a true butterfly and they won't give you some relief. I mean, that is true. Some brokers will do that, and that's one of the headaches of putting this trade together that way. But let's go in and look at this now. Let's look at the profit and loss graph. The correct way to do it, in my mind, is you should the market can't go up and down. So if the market is hurting you here, it's helping you here. And so you should get that relief. So the risk doesn't kick in until you get to the 180 level. And if we did just sell the short spread, it's usually about double the credit. So I would expect to get $2.30 from 175 to 180. That would be a really good spread though. $2.30. That's almost a 50-50 bet, right on a 5-point wide. So let's look at that. Let's see how close that is. And that's just my experience from doing so many of these. Let's clear it. So the risk is from 175 to 180. We're embedding our hedge into this trade by putting on the 165, 170, skipping the 175 and buying the 180. We're basically selling a credit spread to pay for the butterfly, for a standard butterfly. I've said it about 12 different ways now. So let's clear these two legs out. And this is the one that we would sell. And we'll make it a sell instead of a buy because I said sell. 170, and we're only getting 50 cents on that. Oh, that's a buy. This is a sell of this. Okay. Sell to open, buy to open. Net credit of 47 cents. Let's send this to the what if calculator. So why is that 47 cents? But this one, I mean, are the bid-ask spreads that scary? I shouldn't be able to get more on this trade than I would on just doing the short spread outright. 47 cents. If we send this to the ticket, yeah, it's saying a 130 net credit. But if we do, so this would be 175 to 180. Risk kicks in at 175 to 180. Again, a net credit of 130. But the short spread, if we do this trade, it's saying a 47 net credit. We must have some wide bid-ask spreads. 360 by 125, 310 by 180. No, they're not horrible. I mean, if you get this trade executed, this one right here, I like that trade. 38 days remaining. Open wing or skip strike butterfly. Yeah, I'm going to look to see. I'm going to try to get this executed in my own account. If we can get it anywhere close to that 130 level, man, that's a good trade. So the 170, we're getting 2 of those. How much are we pulling in? So just looking at you're getting, the ask is bigger on the 170 than on the 175. That's, well, I guess it's more in the money. That makes sense. But that's only 70 cents wide. Yeah, I think it's executable at that price. Now, let's go on inside the paper trading account. Let's look at the orders. Long put spread. And let's click here and let's see if we can get this done inside the paper trading account at 1. I would work it at 130 in a real account. We're going to put it in at 1 in the paper trading account. We're going to see if that gets executed. I don't see any questions or comments. I think we're going to call it a day. So the 2 trades, we talked about Uber. Uber looks really interesting. If we break through 180, I'd say 81. If we get above 81, we're going to look to get long in Uber. I like that outlook. And NXT, I think it's going to have a real tough time if you just look at NXT breaking through, let's call this level. Let's zoom in here. This recent high, 131. It's going to have a tough time to break through it. But if it does, it's definitely a bullish trade. But 131, I think, is going to be tough after earnings. They're going to have to, if they have any little tweaking in the earnings or any little signs of downside, it's going to be a reason to sell that underlying stock. And I do like just getting short and selling some of that volatility. And then I think I like, if we can get that skip strike butterfly done 1 by 2 by 1, I'm still looking at it because it's not really, if we can get that done for a net credit of 130 to the account, I really like the longer term skip strike butterfly on this trade. That's 5 points. Yeah, that's 10 points. Yeah. You got 5 points of risk pulling in 130, going out 38 days. Stock's got to go above 175 to be in true risk. But to start with, the profit and loss graph is a little scary. So if you did break through the upside after that earnings report, you have a lot of volatility. That volatility needs to come in order to get profitable on this trade. But I like it. I like that trade a lot. I'm going to actually put that one on too. So here it is. If you have any more comments, I do appreciate it. Let me know, and I will try to answer any questions that you may have. But yeah, NXT open wing butterfly or skip strike butterfly going out 38 days. This is the trade that we're going to follow. This is going to be a fun one to follow, and we're going to have a lot of time to follow it. Thanks for stopping in. We'll be back on Wednesday for the next edition of Options Guide TV. Until then, please go to hub.trader.com, check them out, see all the speakers that are available. They had a great live event in sponsorship with the CBOE last week down in Florida. And if you didn't know about that event, well, then you obviously don't have a Trader Hub account and you want to sign up. It's free for all. Thanks for stopping in. We'll see you Wednesday.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.